Well, hello, and yes, it's me, Kenny Polcari, your host of the party, and today is Monday, May 13th, 2024, and here I am at the beach. How spectacular does that look? Look at the ocean behind me, the sand, the sun is out, there's a little bit of clouds in the sky, but it is an absolutely spectacular day here in South Florida. Juno Beach is where I'm standing, and that is what you see behind me, and it is spectacular. Okay, anyway, so here are the things that you need to know to get your day started, right? What happened last week, what's happening this week, what's important, and what should we know about? Well, on Friday we found out the University of Michigan sentiment survey plunges by 10 points. Although stocks ended the day mixed, but they ended the week higher, right? Bond yields continue to decline. But is that going to be true this week after we get the CPI and the PPI report? Oil is struggling at the trend line even as the Mideast tension builds. Gold is thrashing around as it looks for more clarity. And this week it's going to be all about the PPI and the CPI, both inflation data points this week. They're coming out tomorrow and Wednesday. And what do we have at dinner tonight? Well, we're going to have the lemon spaghetti. Delicious, and it's summertime. Okay, look, stocks ended Friday mixed. University of Michigan Consumer Sentiment Survey fell by 10 points, right? Coming in at 67.4, down from 77.2, which is a 6-month low, suggesting that some parts of the economy may be cooling, and that caused the swaps traders to once again push the idea that rate cuts are near. The Dow added 125 points, the S&P up 8 points, the NASDAQ lost 6 points. The Russell gave up 14 points. The transports were up 85 points, and the equal-weighted S&P gained 10 points. But like I said, while they ended the day mixed, they did end the week higher as investors put the April angst behind them, right? Now, just to be clear, the Dow S&P and the equal-weight S&P and the NASDAQ are up more than 3.5% in May. The Russell and the transports are both higher by 5.5% in May, right? And this is a complete and welcome reversal from the April performance when investors dealt with the start of the first quarter earnings season, and that caused all kinds of concerns, right? Stocks that disappointed got whacked, while stocks that surprised did rally, but just not as much as expected. As of today, 92% of the S&P 500 companies have reported, and 80% of those have beaten the estimates. And then there was the tax day, which is in the middle of April, another event that causes last-minute pressure on stocks, as well as the economic data that revealed what we all know, that inflation remains stickier, upending expectations of rate cuts anytime in the near future, and that caused some last-minute month-end drama. As a result, the bond market also struggled in April, right? The TLT was down 7% in the month. The TLH lost 5.5% as we saw yields push higher. The 2-year kissed and pierced 5%, while the 10-year bumped up against 4.7%. This morning, the 2 years yielding now 4.84%, while the 10 years yielding 4.48%. But May has proven to be another story. We are nearly done with earnings, and the idea that rates are not going down in June, July, or September appear now to have been really accepted by the majority of market participants. The push is now for a November or December cut, which is better than no cut at all. Now, they just can't let it go. Can you imagine the fit that they're going to throw when they realize that there are no cuts coming at all in 2024? Because that's the camp I remain in, and I've been saying it for months. Now, last week, we heard from a host of Fed heads, right? And most of what they said was in line with what ＪJ said at the end of the FOMC meeting 2 weeks ago, right? Rates to remain higher for longer, and they are in no rush to cut them because the data just doesn't demand it. In fact, Fed Governor Michie Bowman, along with Dallas Fed President Lori Logan, Boston Susie Collins, Minneapolis's Neely Kashkari, Richmond's Tommy Barkin, all saying that it's too early to speculate on rate cuts. And Michie said, and I quote, "I, at this point, have not written in any cuts for 2024. I sort of have this even expectation of staying where we are for longer, and that continues to be her base case." Logan had this to say: "It's just too early to think about cutting rates given disappointing inflation data so far this year." Neely Kashkari chiming in with rates will likely remain higher for longer for an extended period of time. I think that's the key there. Extended period of time. Now, even with all this, stocks are now kissing all-time highs, and the bond market has rallied just a bit ahead of this week's latest inflation data, right? We're going to get that's going to sure to be the focus, right? We're going to get the PPI, the producer prices, on tomorrow. We're going to get the CPI, consumer prices, on Wednesday. Now, this is where the rubber is going to meet the road. The PPI is expected to be up 0.3% month over month, which is up over last month, right? It's going to be up 2.2% year over year, which is also higher than last month. Now, ex-food and energy, it's up 0.2% in line with last month, while the year over year number is going to be up 2.3%. That's down 0.1% versus last month. So it is a mixed picture. The question is, what will the market focus on? Wednesday CPI is also expected to give a mixed picture, right? Top line CPI month over month is expected to be up 0.4%, in line with last month. Year over year is expected to be up 3.4%. That's down 0.1 over last month. Ex-food and energy month over month expected to be up 0.3%, while the year over year number is expected to be 3.4%, which is just off versus last month's 3.5%. And so, my guess is that if we get these numbers if we get the numbers we're expecting, then I think the market holds steady and churns right in here. Just because I think it feels a bit tired, it feels a bit stretched. If the numbers are worse than expected, means they're higher, then watch as the algos once again all go running for the door at the same time, causing stocks to decline. And if we see a drop beyond the expectation, then I do think that we're going to try to push a bit higher, but we're going to have some difficulty in doing so because it feels like we've already priced that in, right? And so I'm not sure that there's going to be much more gas in the engine to push stocks up and through significantly higher, right? I just don't see it at the moment. So what I'm saying is, it feels a bit toppy here, which only means relax, sit tight. The bottom does not feel like it's about to fall out. Now, what is interesting is that the BLS, which is the Bureau of Labor Statistics, announced that coffee prices will no longer be factored into the inflation data. So Wednesday's announcement is not going to include it, which left the guys at the Go Let's Eat letter wondering why not. And what did they find out? Well, you'd be very surprised. They found out that coffee prices are up 78% in the last 9 months. Now, to be fair, the BLS did announce this change to the CPI back in January. So this isn't really coming out of left field, but just to be clear, coffee prices are up 35% in the first quarter of this year. So if we just eliminate it from the equation, then that takes some of the pressure out of what? Higher prices, Garish. Now, recall that Starbucks reported a 6% decline in traffic at their stores. Maybe it's the price of the venti latte at $4.50, right? All I know is my Dunkin' Donuts extra large coffee with cream and 1 sugar cost me $3.50. I was never a Starbucks drinker. The coffee leaves a bitter taste in my mouth. Maybe that's because it's bitter. In any event, how much longer before the BLS starts eliminating other problematic parts of the puzzle to try and bring the monthly CPI figure down? I mean, if you don't like something, just change the definition or change the equation. It always works, right? I mean, look, 2 plus 2 equals 4, but 2 plus 1 only equals 3. See how that works? It's not rocket science, it's just math. Now, this morning U.S. futures are up, and this is because it's building speculation that both the PPI and CPI numbers will not surprise to the upside. Dow futures up 25, S&P's up 7, Nasdaq's up 35, while the Russell is ahead by 8. Markets are looking for any reason to rally, right? They're going to tear apart both the PPI and the CPI, looking for data points that support their story, which is a rate cut, right? Rather than those points that do not. And at the very least, they're going to try to show us that even if both reports come in as expected, the rate hike narrative is completely false, despite a boatload of economic data points that suggest otherwise, right? These reports are going to be this week's focus, and these are going to be the key gauge in determining the near-term future path of monetary policy. I wouldn't do anything until I see what the data says in terms of trading, right? I'm hoping that there's still a bit hot, pushing stocks lower. Because if they push stocks lower, I get to buy good stocks that are on sale. I mean, don't you? In any event, oil continues to trade around the trend line at $77.90 a barrel. Overnight, we tested and bounced off that level, and at 7 a.m. this morning, we see that oil's up 30 cents at about $78.60. It appears that we're in this $77.90, $81.30 trading range. Now, what's interesting is that oil has failed to rally significantly, even as the tension builds across the Middle East and ＪoJo suspends weapons delivery to Israel after he stamped his feet for all of this aid. $28 billion for Israel now on hold as JJ panders to the left while giving Ukraine another $60 billion and Taiwan $8 billion. In addition, the U.S. dollar is steadying here at 105.27, down 1.2%, but still up 4.1% on the year. Again, the trend line in oil is 77.90, and that is key. If we fail to hold that again, then I suggest we're going to see oil trade down to the mid-70s. This morning, gold is down $25 at $23.48. This as traders continue to consider a possible slowdown coupled with sticky inflation, higher for longer in the most recent hawkish commentary coming from a range of those Fed heads. Gold remains in the 2,300, 2,400 trading range as it looks for clarity, something that may come to us this week. European markets this morning are churning, slightly lower, down about 0.2%, as investors there await the latest U.S. inflation data. We know that inflation is supposedly coming down across the Eurozone. The Bank of Sweden cut rates last week, the Bank of England and the ECB, both considering rate cuts as well. European bank stocks are hitting new highs on the back of upbeat earnings. And shipping giant Maersk is up 8%, while Siemens, right, is down 4%. The S&P ended the week, like I said, at 52.22, well above trendline resistance, which is at 51.41, leaving us 40 points away from the early April highs of 52.63. Recall that last week when we broke up and through resistance, that was significant, and I told you that that was a key move. Why? Because technicians saw this push up and through resistance to be very bullish. But we needed to see an increase in volume to confirm the move. This week might just prove to be that point, right? If inflation remains sticky, then look for volume to increase as stocks sell off and if inflation appears to be slowing, then watch to make sure that we see the increasing volume as they try to take stocks higher. A failure to see increasing volumes on an up day is going to be a warning sign suggesting that investors are growing a bit tired and are no longer going to chase stocks higher. Doesn't mean they're going away. Just means they're not going to chase. They're going to be a little bit more patient, let them come to them. As a long-term investor, what the past couple of weeks have shown you is that remaining calm, staying the course, and being strategic is the way to go. You can always call me to discuss 212-381-6194. In any event, what do we have at dinner tonight? Well, we're going to have this lemon pasta. It's a lemon spaghetti, and it is summertime. And so it's always great to use lemons. And by the way, I'm down here in Florida, and we always use lemons anyway because it's always summertime in Florida. And this is going to turn out to be, I'm sure, one of your summer favorites. It's simple to make, quick to make, and it is delicious. So for this, I'm going to make this with a half a pound of spaghetti. So then just double everything up if you want to make a pound, right? You need butter, you need olive oil, you need a block of Parmigiana that you're going to grate as you need it. You need fresh lemon juice, you need lemon zest, and you need lemon peels. And you need some fresh basil. Bring a pot of salted water to a rolling boil, leave it on the back burner until you're ready to use it. Now begin by peeling the lemon to get the lemon peel slices. Set those aside. Now squeeze 2 lemons so you get the lemon juice. Set that aside. Now you've got it ready for you when you need it. Now, begin by bringing a large saute pan, get a large saute pan and add in the butter, right? A pan that's going to be large enough to accommodate the pasta. Now you're going to melt the half a stick of butter, you're going to add some lemon peel slices, and you're going to add a basil stem that's got 2 or 3 basil leaves on it. Now you're going to add in about a half a cup of water and some of the lemon juice. You always add a little bit less because you can always add more if you need it. If you add too much, then you spoil it, right? So add less, and then you can taste it, and you can always add more. And then add a couple of rounds of good olive oil. Now put the pasta in the pot, bring it to a boil. When that's done, remove the lemon peels and the basil stem. Add the pasta directly to the saute pan. Now add in some lemon zest, some fresh basil, tear it up, and some freshly grated Parmigiana cheese that you're gonna grate right over the pasta. Mix that well. If you need it, add in like a half of a ladle of the pasta water and continue to mix it until it becomes nice and creamy. Serve this immediately, always offering more cheese on the table for your guests. Okay, so there you go. There's dinner, there's the markets all in one push, and here you go. It is a spectacular day here at the beach in Juneau. Down here in Florida, it's probably gonna be about 85 degrees and gorgeous. Until tomorrow, take good care.